Hello and welcome. You are watching Commodity Today English, your trusted source for latest updates from global agriculture and commodity markets. I am Palak Singh and today we are looking at why Indian rice export prices have risen for the third consecutive week and what this could mean for exporters, farmers and buyers around the world. Let's get started. Indian rice export prices have moved higher this week, driven by two major factors: the government decision to increase the Open Market Sales Scheme or OMSS reserve price and growing concern over the progress of the 2026 monsoon season. India's 5% of broken parboiled rice is now being quoted at 352 to 357 US dollar per ton, compared with 348 to 352 dollars last week. Meanwhile, 5% broken white rice is also being offered at around 353 to 357 dollars per ton, reflecting the strengthening trend in the export prices. So, what's driving this increase? The first reason is the government's decision to raise the reserve prices for the rice sold through the open market sales scheme. Since rice mills and traders now have to purchase government stocks at higher prices, their producement costs have increased. To protect their margins, exporters have also raised their export quotations. The second factor is the monsoon. Although rainfall has improved in several regions, paddy sowing is still trailing last year's pace. As of July 10, rice has been planted on approximately 11.5 million hectares compared with 12.6 million hectares during the same period last year. This lower planting has raised concern about future rice production. If rainfall remains uneven in the coming weeks, supplies could tighten later in the season, putting additional upward pressure on the export prices. The developments are also closely watched across Asia. In Thailand, exporters remain cautious because of weather-related concerns and the possible impact of El Nino on future production. In Vietnam, export prices have remained largely stable as buyers wait for fresh supplies from the summer-autumn harvest. Meanwhile, Bangladesh is dealing with flood damage that has affected more than 28,000 hectares of crops, keeping domestic rice prices firm. So, what does this mean for India? Higher export prices could improve earnings for Indian exporters. However, this is also a challenge. If prices continue to rise, some price-sensitive buyers, particularly in African markets, may postpone purchase or shift to alternative suppliers like Vietnam or Thailand. Next few weeks will be critical. A strong monsoon and a faster paddy sowing could help stabilize prices. But if weather concerns persist, Indian rice export prices are likely to remain firm or even more higher. That's all for today's update.